So to get started, Federico, maybe we can start with you. You work on at the protocol level. So for those that are new to it, how does RGB enable issuing assets on Bitcoin, and why is that powerful? It's a powerful thing.
Yeah, sure. I mean, without going too much into technical details, RGB employs a new design called client-side validation, which allows to assign to Bitcoin UTXO extra value, which is not only the satoshis that are on a Bitcoin UTXO normally, but you can also say, okay, also this asset representation is assigned to this Bitcoin output, this Bitcoin address. So if you have the ability to move it, it means that you're also the owner of this asset. And on top of this, then you can build a compatibility with Lightning Network and with other scalability solutions on top of Bitcoin. So you get the full benefits of Bitcoin in terms of security, of trust assumption, the same benefits on Bitcoin regarding to scalability with Lightning Network, without introducing any significant trade-offs.
Thank you. And so Gabor, from that perspective, what's backing up Hadron, and what is your guys' strategy and approach on the tokenization?
Yeah, makes sense. So on Hadron is a token issuance and management platform with full-service compliance engine, as well as corporate actions and transfer agent and administrative capabilities. It connects traditional finance to Bitcoin finance, which basically almost everyone except us failed to do previously. And so we added Tether scale to this equation. There's about $700 trillion in assets in the world, and about 30 trillion of which will be tokenized by 2030. And we would like to be the infrastructure with Tether, and specifically the Hadron platform, to a new generation of assets that are coming on chain. Our hope is that it will primarily be built on Bitcoin, which is the most solid foundation for these new types of assets. And I'm excited about the space. And USDT and XAUT follow. USDT is the most well-known tokenized assets. We tokenize the dollar, and that is just a small part of what we can do. And so we're excited about the next chapter of transformation with the stack.
Moving to you, Arnab. So STOKR has helped companies, to issue securities on chain. So from your perspective, what does tokenization look like from, let's say, traditional issuer and investors?
I think if we see how the stablecoin market is growing, right? I think with USAT, trillion is not that far, right? You will have soon stablecoin in the trillion side. Now, if you have money on chain, you need securities to be on chain, right? You will not buy the traditional securities by selling your stablecoin and getting the money in the bank account and asking your broker to buy it on your depot accounts. It will not happen, right? Mm-hmm. So you want the swap natively, right? And this is where I think, where I see securities and Bitcoin will be the same wallet. And this is the infrastructure that we are heading for. And it will be securities, Bitcoin, and stablecoin in the same wallet.
All right. So maybe worth mentioning, I mean, I was biased many years ago before meeting Bitcoin, but for me, tokenization was all about Ethereum. So maybe, Federico, can you tell us why Bitcoin, why RGB, or other L2s, in your opinion, are strong base for this evolution of asset tokenization?
Yeah, absolutely. I mean, one reason we already touched on it, and is the fact that Bitcoin can offer better securities and better features compared to the other layer one. But also, the fact that it's a truly neutral playground. I mean, usually all the other layer ones are always someone playground, while Bitcoin is the only truly neutral place. So especially for big institution, big players, they prefer to either play on their own playground or in a neutral space, not in like enriching someone else that issued like a native layer one token and stuff like that. But then there is also another angle. I mean, what is the biggest asset in the industry? It's Bitcoin. So we want to trade against Bitcoin. Is the most liquid asset, is the biggest one, is the most spread, even bigger than the stablecoin is still. The market cap of Bitcoin is over 10 times the one of USDT and any other stablecoin. So right now, if you want to trade either like a stablecoin or other tokenized asset against Bitcoin natively on chain or like on layer 2, if you do it on Ethereum or other layer 1s, basically you need to use the raw Bitcoin. So Bitcoins that require the user to have trust in a third party or like in a wrapping mechanism that secure the Bitcoin, which I mean, some people are comfortable with it, but personally, I wouldn't be comfortable to put a large amount of money in this raw Bitcoin solution, and I'm sure there are a lot of people that don't feel comfortable, so they are not using on-chain DEXs. Also, I mean, this is for sure is an extra friction for them. So anyway, Bitcoin is the only truly decentralized asset, because both stablecoin and tokenized security, there is a centralized issuer. So it makes much more sense to have all these centrally issued assets to be on Bitcoin and to interact with native Bitcoin, with real Bitcoins, rather than have it to centralize Bitcoin to play with it on other chains.
So I guess we could say, Gabor, that Bitcoin could become the plumbing of the global, well, or part of plumbing of the global market. So would you? What are your thoughts on how tokenization assets fits into that type of vision?
Again, I think the fundamental thing to remember is that every 50 or 70 years, the financial services industry remakes itself. And right now, finance represents about 35% of global GDP, and tokenization is the driver that is basically helping this transformation. And it will be built on Bitcoin, because Bitcoin itself is what started this transformation. And so, again, as Federico and Arnab mentioned in previous notes too, Bitcoin is just a solid foundation. There's regulatory clarity around the assets. But one thing to note is I think we as an industry and Bitcoiners have done a terrible job in two things. One, marketing ourselves, which all these tokens have spent a lot of money and energy and human resource on. The second is we failed to build friendly interfaces and integrations in the traditional finance markets. And so we're just doing that work. And again, the first products are coming out in this space. So I'm actually very excited about this evolution. And again, Bitcoin will help transforming 35% of the global GDP. And in order to do that, we need to get assets to this ecosystem from traditional finance, and tokenization is the key to it.
Yeah, it is refreshing in a way to see how the industry, the Bitcoin industry, is getting closer and closer to traditional finance, and also trying to fit in existing business processes that they have to go through for whatever reasons, internal or even from a regulation perspective, that they have to do. So, sorry, you would.
I wanted to say, just on financialization, I worked over 10 years, 11, on trying to get a Bitcoin ETF to market, and we won that. And that was the first real use case from an institutional perspective of making Bitcoin a collateral in the traditional financial system. And I think a lot of other things are just going to get unlocked because of the idea that a Bitcoin ETF opened up. So that's, again, tokenization is the next instrument change there.
Fantastic. So I guess with that, it kind of brings us smoothly to the topic of institutionalizations and compliance and regulations. So Arnab, you work with regulated issuers, right? So what are the key compliance or operational barriers that institutions face when entering in tokenization?
I think the first is the mindset, right? You cannot change the mindset with any laws or infrastructure, right? That's the first thing, right? As you mentioned rightly, the first thing when it comes to tokenization, it's EVM. Why? Because it was the marketing, right? But I think there is some fundamental elements we're missing for some time in the tokenization, at least on Bitcoin, because Bitcoin tokenization, at least on STOKR, we for a long time were kind of nudging the users to go for self-custody infrastructure. Because at the end of the day, when you're issuing tokenized securities, we have, it's not completely non-regulated space. It's a regulated space. STOKR is a vast in Luxembourg. We're in the process of going for MiCA license. So we take a lot of legal obligations as an issuance infrastructure provider, right? But where some things were missing is regulated custody infrastructure for tokenized securities, right? Now we are seeing players like Komainu, players like Hex, they're looking into these things of tokenized securities custody for liquid, right? Which is very interesting because when we launched the BMN in 2021, we spoke to a number of institutions and they could not hold it because they were afraid to manage a mnemonic key. Yeah, I can understand that because they didn't have proper rules and all the policies and everything, but now that thing has changed. Second thing, people were talking about the money on chain, right? Stablecoin didn't have a regulatory framework. Now, good or bad, Europe has a stablecoin regulatory framework, though it has its limitations, but there is something. So you can do a DVP, delivery versus payment, in that sense, on chain, with the money on one side and securities on one side. So that's there. Education, I think this is, the fundamental knowledge sharing, that things have happened. You are not the first one. There are a lot of infrastructure build-up has happened. The infrastructure is there. STOKR is in the market for almost 8 years now. We are one of the oldest players in the space. And we built the infrastructure very slowly, but on a very robust foundation. And the players now, Hadron and others, are coming in because we now are having number of options for those issuers to go to and talk to and compare solutions, because this is required. This was not there. So I think the market has reached the inflection point, as you mentioned also regarding the ETF, right? ETF changed the mindset fundamentally, right? Yeah. If the largest player, BlackRock, as on one hand is holding Bitcoin with Coinbase, on the other side they're issuing Biddle Fund, going from BVI on chain agnostic process, it has a drastic change. Yeah. It tells something that they are going for a direction that they want to bring the full ETF business and those larger institutional business on chain and target that stablecoin audience. So I think we are at the inflection point right now.
Brilliant. So Federico, with RGB and privacy model, so how can issuers then maintain compliance and while keeping transactions private, always around the regulation?
Yeah, I mean, sometimes people that privacy and compliance, they're like in contrast to each other, but that's not true also because we see it in TradFi. You don't have complete transparency to all the world about every transaction that is happening. There is selective transparency only towards parties that need to see the content of a transaction. I cannot go on a global database to see every US dollar transaction or every security purchase. So the fact that layer ones tend to be very transparent is it's not something that necessarily is necessary for to be compliant. You can have privacy and be compliant at the same time. How you do so? You need to have privacy by default, so meaning that the whole world cannot just see your transaction just by going on a blockchain explorer. But then you can have selective transparency towards like either regulator or whoever you need to be transparent to, like interested third parties. And this can be done by just disclosing the transaction that you need to disclose towards the party that you want to be compliant with. So actually, privacy is a very good feature. I mean, people start appreciating privacy more and more because also you see these problems with the kidnappings that happened all over the world. Part of the reason why this can happen is because it's quite easy to figure out who has money on chain. So if you can have a good privacy feature, it's something that everyone appreciates. And if your business model implies that you need to be transparent with your regulator, you can still do it by disclosing the information that the regulator asks you to disclose.
Right, which with this, of course, will kind of bring an acceleration to adoption. And as Arnab was saying before, events like ETF are kind of expanding the understanding of what tokenization is like. So Gabor, on that front, are we seeing like early movers among like asset managers or banks, for example, that are actually deploying tokenized products in your experience?
Yeah, definitely. And just to on the previous points too. So for instance, so Hadron has a full tool set for AML, KYC, and KYT, and institutional grade compliance in 130 countries. So an issuer just go to a platform.
Bank friendly.
Yeah, well, bank friendly, and actually we're, again, I'm obviously biased here, but we're doing a better job than banks. Tether has worked on, I think, 2,400 law enforcement cases, and platforms are plugged in everywhere, and so that, and with a higher frequency than any banks that I've seen. And so institutions are coming because now seeing the data around compliance and how good things are. Obviously, BlackRock was mentioned. I was actually the first guy to present to BlackRock's board and leadership on Bitcoin. It was 2015. And they've come far, and now their CEO has launched an ETF. It's the most profitable ETF they have. It's 100 billion plus in assets, and now he's saying they're going to tokenize their entire business. And the reason for this is very simple. There's like a little bit of capital markets history, as we've seen stocks and bonds coming to market. That was the model, and then hedge funds and pooled investment vehicles pulled those. Then mutual funds made hedge funds more transparent. Then ETFs made mutual funds more transparent and better, cheaper, faster. And that's what's happening with tokenized assets too. It's just the next evolution of the ETFs. So institutions are coming into this market because it is the next evolution of their business. And a new generation of investors out there who have accounts on Bitcoin and crypto exchanges, but they don't have a brokerage account. So now we're seeing tokenized products in order to distribute products to that generation of investors. And every 19 years, about 33% of the world turns over to basically
Something
become
new,
like financially literate and have actual assets. And we are about halfway to that cycle. So that's why I'm really bullish in the next 5-7 years of basically people are buying tokenized assets instead of ETFs and mutual funds.
So we gotta be patient, but with positivity, I guess.
Five, on the arch of history, 5 to 7 years is not that much. So.
Right. So on that note, as the market is maturing and it's kind of a part of it is morphing in something new that they are still trying to even figure themselves out how this is going to look like, where do you see this going in the next, let's say, couple of years? Starting with you, Arnab, in sense of where do you see the tokenization market going in the next couple of years, and any surprises? Do you expect any surprises or?
I think right now on STOKR, we are seeing a good demand for fixed income products. We right now have over, I think, 600 million just fixed income products. And that's the market is growing because in the current macro environment, this is very interesting for a lot of players. We're also seeing interesting demand for Bitcoin treasury companies in tokenized format, because what happens is when you tokenize the securities, you can actually go to the DEX platform and trade against the Bitcoin pair. Now imagine a MicroStrategy which has a strong metrics of BTC per share. You cannot trade MicroStrategy against Bitcoin on traditional market.
Right.
And the Bitcoin volatility is over the weekend. Now, if you can tokenize the MicroStrategy shares and bring it on a platform like a decentralized exchange infrastructure or even centralized exchange infrastructure like Bitfinex and likes of them, and make it tradable against the Bitcoin pair, so on the weekend there's a volatility, people can trade and generate some alpha. This does not exist in tokenized format. So what we'll see is different kind of interesting mixture, and also like a stablecoin pair, people will do arb trades and all these things. And there is, I think, is a huge room. Another thing which is very much exciting, and I'm seeing, and we are talking to a number of large asset managers in that direction, is money market fund. We saw the first version of money market fund at the moment, where yield is not given on a much more higher frequency. But if you tokenize it, and that's where it is heading effectively to the market, you can even give the return on a second basis.
Right.
Now imagine you're a hedge fund holding for 5 hours the fund units. In traditional market, you will not get the return for those 5 hours. But in a tokenized format, you can airdrop for every second basis, and you can actually give. And if you bring this kind of platforms, like products like on Bitfinex securities, likes of those platforms, I think a lot of user base would like to buy. Now add to that, like how I think where we can bring our tokenization elements and connect them to the digital asset market, activate margin lending against it. on platform like Bitfinex Securities, you will see a massive volume that will come to this tokenized space, and which may even much more bigger than all this crypto L1 things that we saw in 2017, 18, 19, 2021.
Yeah.
And that's a massive market, and which we cannot even think of.
Gabor, you wanted to chime on that, or we'll let Federico maybe kind of give us, I don't know, maybe your opinion on where RGB could be in 2 years, or what type of use cases it could fit into, or where do you see the protocol going, and alongside with the growth that we're expecting from the market?
I mean, for RGB, of course, the first use case is on the stablecoin side, because where there is the biggest product market fit. But I think also the tokenized security in general, like also not only security but also commodities and other stuff, it has significant advantages because of the. I mean, people will start to see that this is such a better user experience. The fact that you can transfer these assets between brokers or even do self-custody, which is something that right now you cannot do. If I have some stocks in my bank and I want to move them to interactive broker, I mean, yeah, in theory you can do it, but good luck. I mean, it's not easy at all. It's not as easy as like moving Bitcoin from one exchange to another. So if we get to the point that you can, there is enough adoption that you can easily move your tokenized stocks or other kind of tokenized assets from one broker to another, it greatly improve the efficiency of the market, it greatly improve the user experience, and there is more space to build, to have more innovation, because right now if I want to launch a product that, for example, offer loans on securities, first I need to get the users to deposit the securities with me, but and so if I'm not already established, it takes a while.
It's a maturity.
Yeah. But if in a world where users are free to move their assets around as easy as they can move Bitcoin, that new player will have will be more able to build and create new innovative products around existing asset class.
Fantastic. So maybe last thoughts to leave the audience. What would be your last thoughts to leave to the audience going, if, once the gentlemen, ladies, will go back tomorrow and think about tokenization?
Get a beer. So the 2 points. First, just contextualizing the opportunity set. I think tokenized products are the next evolution of investment wrappers after ETFs. So tokenized, basically, that's the new investment wrapper. So that's point one, and the opportunity sizing is by 2030, 700 trillion of the world's assets, and 30 of which, so 4 to 5%, is expected to be tokenized. And we've seen this with ETFs actually growing in a similar pace. And then the second point I wanted to make is what our CEO, Paolo, likes to make too, is that one of the fundamental implications of tokenization and this new capital market infrastructure system that we are building is it's built for the other half of the world. Mm-hmm. So the emerging markets where people don't have access to not just payments, but also capital markets. So people will be able to raise money, new businesses that are otherwise excluded from the exchange and the investment banking environment don't have to wait for an analyst on the 27th floor of Goldman Sachs to raise capital. So I think that's it's very important. So we're focusing on that 3.5 billion people to get first real access to capital markets. So that's what I'm most excited about.
Thank you, Gabor. So what your thoughts, Arnab, and then Federico, on these points? What would be, maybe 2 takeaways for the audience to bring with them about tokenization and where we are with it in terms of market maturity and so on?
I think that was my presentation, right? Is we are in the product market fit already, right? And if you are considering that your business should survive for the next 50 to 100 years, this is the time to jump in, right? Mm-hmm. If you're too late, somebody else will replace. Like, for example, look at the stable coins. After Tether came in, all the banks are now trying to experiment on stable coins. And it's too late already, right? The market share is already gone. So be fast, be agile if you want to survive. The second thing that I would say is very interesting is the Bitcoin will be one of the most it's an asset class that comes once in a century, right, in that direction, right? And a lot of financial value will move around it, right? So think of how you can integrate Bitcoin in your value chain as a financial institution, as a bank. I see there are a lot of private equity funds or private debt funds will have a bit of Bitcoin kicker and all these kind of things, maybe gold with some reference point with BTC and everything. A lot of room to experiment, a lot of room to generate some interesting yield in the current macro environment. So I think this is a time. A lot of players are coming in, and this is, I think, like what we see, larger players are already doing some things. So yeah,
Thank you.
do
Arnab.
something.
Thank you so much. Federico, maybe your last thoughts on the topic?
No, yeah, I mean, like, yeah, I mean, for sure there is a product market fit, but we are still in the early phase, so there are plenty of opportunities. I mean, still not so many people are jumping on this opportunity. You see, it's like, yeah, very few players are truly working on this seriously. So, yeah, I mean, I think it's fantastic to be paying attention on this market right now, and when there is so much potential for growth.
So tokenization is not about speculation. It's pretty much kind of building the next level infrastructure financial system. So thank you so much, gentlemen, and we will move to the next and last presentation. Thank you so much.
Thank you, Luca.